Hello, this is Huskins, your Forex mentor. Welcome to the daily review of February 22nd and a preview of February 25th, your daily dose of events that shaped the Forex markets. Let's start with the thought of the day. Like always, to be in your child's memories tomorrow, you have to be in their lives today. I'll try to live by this thought all the time. The reason why I am a Forex trader is I can spend as much time as I can with my children. Tomorrow being a weekend, I'm not going to be touching the forex markets at all. I'm not going to be looking at charts or analyzing anything. All I'm going to be doing is enjoying my children. Now, this is an interesting joke. If you owe the bank $100, that's your problem. But if you owe the bank 100 million, then that's the bank's problem. Now, we had a wonderful trade setup which yielded about 30 pips. The explanation for that is given to our subscribers, and you can have a look at it because it gets attached to the trade plan video. So that's why I'm not going to go into execution of this trade right now. But we got in, I got in short from about 1.3499, and we made a quick painless 30 pips. So this was based on the Canadian CPI. Now our trade, the my entry price was 1.3499, but there have been people who said that their entry was 1.3495. So I'm just noting that down 95 as an entry price. We always try to show conservative results rather than have elaborate results. What I also want to talk about is that the reason why we had a 30 pip stop and a 30 pip target, that has to be that has to do with the average true range, which was 120 pips on the EURCAD. Now I placed the stops above the ATR level. Now if you do not know what I'm talking about, basically you need to see my video called Smart Stops and Smart Targets. This will help you um, place smarter stops in the forex markets, and have achievable targets in the forex market. So that's something which you need to do. Again, that's again a part of your subscription, so you don't have to worry. You can have a look at that video. Now what I would like to discuss is that we had two news: the Canadian CPI and the core retail sales. The Canadian sales was bad. However, is it a market mover? Is it a changer of the intrinsic value of the Canadian dollar? Now, basically, the CPI reading told us that there isn't much inflation going on, so an interest rate hike is basically off the cards right now. But the retail sales was bad, and which caused the Canadian dollar to depreciate. Now, um, I go with the way news works is in two ways. There are certain news which causes the market to move continuously in one direction. There are certain news which cause the market to change its direction. There's a knee-jerk movement, and then it changes its direction. So let me just pull up my chart. The news came out which caused the market to go up, the EUROCAD to go up. That means the Canadian dollar is weakening, and when it started weakening, I sold the EUROCAD. So I bought the Canadian dollar. So this particular news was based on the fact that the retail sales, however bad it was, and it was a nasty number, the core retail sales was minus 0.9 when 0.1 was expected. It was not a market mover. Now, why wasn't it a market mover? Is because you need to understand that Canada does not rely on retail sales. It's not a retail sales economy. What it is a commodity economy. So if there is a fundamental shift in the commodity prices, then we'd see the Canadian dollar depreciate. But if we miss retail sales by a percentage points, it's not going to make much of a difference, at least in the perception of where the Canadian economy is headed. Now let us dwell more into it on the consumer price index, which was released in January. The consumer prices rose 0.5% in the 12 months to January, following a 0.8% increase in December. On a seasonally adjusted monthly basis, the consumer price index decreased 0.1% in January after posting a no change in December. That means there wasn't any change in December, and in January declined. So we're seeing, though I wouldn't call it deflation, but we're not seeing increasing prices. The retail sales trade. Now, following 5 consecutive monthly gains, the retail sales declined 2.1% in December. Can you imagine that in December retail sales decline? That's basically unheard of, because December is perhaps the month wherein the most amount of shopping takes place. Now, excluding sales at motor vehicle and parts dealers, retail sales decreased 0.9%. What does this mean? It means that the biggest people who were hit were the cars. It looks like Canadians aren't buying new cars. Now, the Bank of Canada's core index for the CPI excludes 8 of the CPI's most volatile components, which are the fruit preparations and nuts, vegetable preparations, mortgage interest costs, natural gas, fuel oil, and other fuels, gasoline, intercity transportation, and tobacco. And basically, tobacco products and supplies. Now, it also does not take into account the effects of changes in the indirect taxes on the remaining components. A seasonally adjusted series is one from which seasonal movements have been eliminated. Users employing the CPI data for indexation purposes are advised to use the unadjusted indexes. But for us forex traders, we like to see a adjusted CPI. It's seasonally adjusted. Because why do I like to look at the seasonally adjusted? Because I'm interested in what the Bank of Canada is doing. Whatever Bank of Canada is going to be looking at, that's what I want to be looking at. Now let's look at the retail sales. You see this big decline this month, but where do you think the trend is heading? So yes, we had a bad month, but yet the trend is up, right? So so what my entire point of this explaining this is that there isn't a fundamental change in the way the Canadian economy is function, and definitely not because of the retail sales. Now you're going to hear this a lot next week. It is really big on the news, and it is a real market moving and market shattering event which might take place if it does, which is called sequestration. Now, how does sequestration impact you? Now there has been dire, prediction over sequestration. The mandatory budgetary cuts scheduled to begin next Friday are plentiful to say the least. From massive job losses to cuts in major government services like defense, as well as social programs in USA, and the likely return of a recession. There is no shortage of disaster ahead, according to the government's official and economic analysts from the president's, own office. Some cuts would be phased in over time, and other programs like Social Security and Medicare are exempt from sequestration. So now what does it mean to you and how can you profit from it? First of all, a few facts on the ground. The sequestration which they're talking about, that is not cuts. What is actually being talked about is cuts in the rate of increase in the spending of the US economy. So they are going to have $1 trillion cut over the next 10 years, and that does not mean much for the amount of deficit which they have. So number one you need to remember is, even if the sequestration goes right ahead, it does not mean that USA will be able to pay down its debt. Now, what's going to happen next week? That's the most important part. Sometimes we over analyze things. My predictions on what the stock and the currencies are going to do for next week is that the stocks are going to be in downward pressure and the US dollar is going to be in upward pressure. Why is that? Because uh, the Republicans and President Obama, um, I have noticed this time and time again, is that they leave everything right up till the last moment. They want to show the other side, other party as the bad guys, and they don't want to take perhaps decisions or tough decisions together. So this entire um, drama will continue to unfold for the entire next week, and most likely there is going to be that's my prediction again, that towards the end of the week, just before the cuts are going to be placed in, or maybe even sometime next week, you might see some kind of um, a pact or an understanding or Congress acting on it. But this is going to create a tremendous amount of volatility in the market, and the Dow does not like uncertainty. And because of uncertainty, it's going to fall. If the sequestration is goes through and they do not come to any agreement, then the Dow is going to fall. If the Dow is going to fall, my prediction is that the US dollar is going to rise in value. So in that case, I'll be looking to go long on the US dollar. Now let's preview the events for next week. Next week, all you'll hear from me is the sequestration. There's been not much, because that's going to be the theme of what the market is going to be focused on. But apart from that, let us see what are the news events in the early part of next week. On Sunday, we have the Italian Parliament election. I don't have a trade plan for that, and I actually have no trade plan for Monday, February 25th. So I'll be looking at the markets, but I might not be trading them. And then on February 26th, we might come up with a trade plan on the Swissy employment level. Okay, we could uh, the Fed Chairman Bernanke will be testifying at 10 a.m. Now, this together with new home sales. So, because Bernanke is testifying, I am not going to be uh, I'm not going to be placing trades on the new home sales, just because if Bernanke sneezes, the entire market can catch a cold. So I'm going to be out of the market even on Tuesday, though I'm going to be watching it like a hawk and trying to make sense of whatever's happening in the market. So thank you for joining me for today's review and the preview for next week. Hope you enjoy these presentations. You can comment or you can email me. I'll love to hear from you. Thank you so much. Have a great day.